David,
Paul, good to see you.
thanks for joining me.
My pleasure.
Appreciate it. Not sure about the weather like today, but
It's a bit wet, but yeah.
This can be a highlight. For those who are uninitiated with the aura that is David Horne, give us a quick intro. Who are you? What do you do? What problem do you solve?
Cool. So David Horne, I trained as a chartered accountant with PwC. Fantastic training, but I knew that wasn't where I belonged. And I left the accounting profession 36 years ago. I've been running my own business for 15 years, and I work exclusively with founders of companies doing two things. Number one is I have a team of finance professionals that I put into businesses on a fractional basis, because one of the things I've discovered over the years is that most entrepreneurs are pretty shit at running finance.
Yeah.
So I have a team of people that I've trained up. They understand how entrepreneurs think, how they speak, and can manage that. And then the other thing I do is I work with companies on scaling through raising capital and buying other companies using a methodology I've developed called FACE, F-A-C-E, which is fund, acquire, consolidate, and exit.
And is that the methodology that was in your book, Add Then Multiply?
Yes, that is the methodology.
That was literally my first introduction to you. Was that book?
Yep.
So it's kind of everything.
Because that came out just around the time that we first met.
Yeah, that's right. Yeah, and I really enjoyed that book. And I remember there was something in that book that I know myself and Carl, my business partner, have spoken about, and it's this idea of like when you're starting out, how you think about equity.
Yeah,
it's like it's better to have a little of a lot than a lot of not so much.
Yeah,
and it's like how founders in the early days think about equity, and it's not about control; it's more about shared value. And what's your? Let's take it from the horse's mouth.
Sure.
So to speak.
And a lot of my thinking was kind of crafted and evolved from my role when I was the CFO of a couple of AIM-listed businesses where they were founder-led, but the founders only had like 5 or 10% because the company had raised a lot of money, bought a lot of other companies and scaled up. But, as I say in the book, would you rather own 100% of something that's worth 1 million or 10% of something that's worth 100 million?
It's weird as well, because we were talking to someone today, a guy called Andrew, who sold his business for 150 million, but he was 7%.
Yeah.
7%.
Yep.
And that's a hell of a lot than trying to ride on your own and have full ownership or even 60% ownership of something that is like tiny in comparison. I mean, exactly. We're talking stupid numbers.
But for some people, that control is really, really important. I was at a talk this morning in the investor tent, and it was 3 people who were all like they owned 100% of their businesses, and they never wanted to look at ever. Some of them were looking at a thing called an EMI option, Enterprise Management Incentive, which is a tax-effective way to grant options to staff. But the condition is that the staff would only ever get their equity when the founder sells. So up until that point, the founder still has the 100% control.
Yeah.
And that's okay if that's what you want, but then your ability to scale your business is constrained by the amount of cash that the business can generate.
Kind of switching tact a little bit, because I know that something you were talking about earlier, the next book you're working on.
Yep.
Obviously, there's a book in between there that is really important, which is about female founders.
Correct.
And investing in female founders, and we'll get to that.
Yep.
But just thinking about the growth and like the equity play and things like that. You are quite big on the idea of like mergers and acquisitions.
Yes.
And increasing value and shareholder value that way.
And then ultimately driving towards an exit. And the idea behind the next book is all around the exit and an observation that is proven with demographics, where a lot of baby boomers and a lot of Gen Xers are now reaching the point in their lives where they want to sell. And a lot of them don't know how to sell, and they don't know where to go about it. And at the same time, there are a lot of people going on these training courses with various organizations that teach them how to go out and buy companies for no money down and in effect buy companies from people and then use the cash flow that was in the company to pay the founder out. And it's kind of, I look at that as a bit vulture like.
Right.
We were talking this morning and I had originally thought that the working title of my book was going to be Ethical Exits. And then we were chatting about it and I said, and this is a way for those boomers and Gen Xers to say to these vultures, fuck right off. And then you suggested, well, maybe that should be the title of the book.
Yeah, fuck right off.
So why not? I'm thinking very hard about it. Yeah, fuck right off, the boomer's guide to maximizing the value of your exit. exit.
And it's never too late to go too controversial, David. Just remember that, okay? I like that title, though. I like that. So coming back to the middle book, the investing in female founders,
yes.
I know there's some horrifying stats around this.
There are.
Like, you know, I think potentially, and I'm just adding my own sort of spin on this, I know there's a lot of societal and circumstantial reasons why there's less female founders than male founders, but the funding, so is so disproportionate.
It is. So there's been statistics published over the last 18 years where in the UK and Europe, the level of funding as a percentage of the whole of venture capital funding to all female founded teams is less than 2%. In America, it's never been more than 3%. Even though female founders are, you know, submitting decks, 6 to 7% of the total decks submitted are coming from them, but they're only getting 2 to 3%. It's a little better if you're a mixed gender team, but the reality is still that the all male teams are submitting 75% of the decks and getting more than 80% of the money.
Well, digging deeper, why though?
Three main things from my research. Number one, just inherent gender bias. Okay. You know, it's a lot better than it was 50 years ago when I was growing up, but it's still there. Number two, there aren't enough women in investment management roles making those decisions. And oftentimes the women who have made it in those investment firms have had to behave like men in order to advance their careers. And so that kind of natural affinity that you'd expect isn't there. And number three is that women tend to be much more conservative with their projections. And if you're going out to venture capital, you know, you have to think about how the venture capital model works. They're looking for the next unicorn.
Yeah.
And, you know, a venture capital will go out and raise a fund of, let's say, 50 million. And they'll invest $500,000 in 100 different companies. And they know going into it that 20 of those companies are going to go bust. And 75 of them are going to become what they call zombies that just kind of tick over but not really do anything. And that leaves 5. And 1 or 2 of them might, you know, pay the money back, and 1 or 2 of them might double or triple the money, and one of them is going to become the unicorn, and it wipes out all the losses, pays a happy return, and happy days.
What should we know about you, David, though? Like, you know, why did you want to fly the flag for that cause? Because there's not many, like, let's be honest about it, there's not many men that are kind of like stepping. There's a lot of women talking about that,
yes,
which absolutely, you know, makes sense.
Yep.
As a male, though, like, what made you want to step forward and fly the flag on behalf of those? Like, from
the kind of foundation of this what I'm doing. There's kind of 2 stories. The foundation of what I'm doing came from when my first book came out. I started getting invited to speak at events, and I was speaking at an event about fundraising. And after my talk, a woman came up and asked me why so little funding went to female founders. And I said, I have no idea, but I'll find out. And I was shocked by what I found out, and that evolved. But kind of deeper than that, you know, growing up in the 60s and the 70s, my mom was a bit of a feminist. She would have hated to be described as a feminist. But when I was 7 years old, I said to my mom, I like chocolate chip cookies. I want more. So she taught me how to bake.
Nice.
And when I was 15 and I had my first girlfriend, and I said to my mom, I think I look smarter wearing shirts that have been ironed. She said, great, I'll teach you how to iron shirts. So I kind of had that growing up as a kid. My wife and I met when we were 17. And we've got 2 daughters, and I've always grown up in an environment where I've had strong women around me. And I just looked at this and I thought, how can I give back to the strong women?
I love that. There's strong origin roots in, like, literally where that story comes from, because I think we see a lot of people, and, you know, LinkedIn's obviously a bit of a hotbed for this kind of stuff. And, you know, there's a lot of people who virtue signal around this kind of stuff. And I think, okay, yeah, what you're saying is right, but do you really mean it?
Yeah.
But
no,
with
true.
you, it goes deep, doesn't it? And
it does.
Obviously being Canadian as well, like, there's a real strong liberal kind of sensibility about you as well,
yes,
which I've got to know over the years as well. And I think that's really, really admirable as well. So,
thank you.
But so the next book, we're focusing on ethical exits. We're focusing on people coming out.
We're focusing on fuck right off.
When do you anticipate? When do you want that to be released? Like, what are you aiming for?
In terms of the book coming out, I think the reality is I will work on finishing the first draft probably by Christmas.
Nice.
And then I'll work with my publisher, so I would expect it'll be out springtime next year.
Nice. That's quick. That's quick. You work quick.
Yeah. Well, I've got the concept in my head, and I'm using the tool Bookmagic, Bookmagic AI. I'll just plug that. I'm a co-founder of that business. And I'm using Bookmagic to help me write the book. And I know I need to do it, and it's just one of those, just get on with it. It's been brewing in my head for 6 months.
With this being the Mastering Business Growth podcast, and you being, a CFO, fractional CFO, a master of raising investment as well, 3 tips, financially related potentially, that you can hand to people who are either starting a business, seasonal, maybe crap with numbers. Like, what 3 bits of financial business growth advice would you hand out today? And I realize I'm putting you on the spot.
No, that's fine. That's fine. I like being put on the spot. So number 1, and it's a little more broad than that, but I have a concept that in my head I describe as being the 3-legged stool. And if you're the leader of the business, you're the guy who sits on top of the 3-legged stool, and you got 3 legs. You got sales and marketing, you got operations, and you got finance. All 3 legs need to be strong, or that stool is going to fall over. And so as you're growing your business, when you're first starting out, you fill all of those hats. But as you grow and bring in revenue, you need to bring in people in each of those 3 areas who are professionals in those areas. And one of the hardest things that founders find is letting go to those people. And yet, if they can do that and bring in the right people and let go, they can scale their company so much faster because they're sitting on top of that 3-legged stool and it's solid and they've got a good foundation to grow. So that's number 1. Number 2, know where your cash is coming in and where it's going out, and be all over your cash all the time. It doesn't matter what other stats. I mean, look at your sales stats, obviously, but look at your cash every day and know what's going on and know what's coming down the line. Because the worst thing that can happen is you think the business is going on well, and all of a sudden you got a 50 grand VAT bill, and you got a 10 grand PAYE bill, and you got a 20 grand corporation tax, and like, where the fuck am I going to find that money? So watch out and know what that is. And when that money comes in, keep it on the side. I often tell people, set up a tax bank account and just put money into it every month.
Yeah. And your third and final piece of advice?
My third and final piece of advice, apart from read my books.
Well, a lot of the content is in there.
A lot of the content is in there.
Yeah, I would.
Read my books.
That's not a shameless plug.
There you go.
You've sweat and toiled over that.
I have.
David, thank you so much for coming on. I really appreciate
Pleasure to be
it.
here.
You've been a busy guy today, so it's hard to pin you down. But where can people find you if they want to get in touch with you? Where can they buy your book? So the book's on Amazon. It's Add Then Multiply. And the other book is Funded Female Founders. Just search that on Amazon, and that's worldwide. And you can find me on LinkedIn. I'm David B. Horne, B for Bravo. And the reason I did that is if you Google David Horne, there's a few of us. But I'm the only David B. Horne. David B. Horne.
David B. Horne.
And it doesn't actually stand for Bravo, though.
No, it doesn't. It stands for Bowen, which is my middle name.
Amazing. Thanks so much for coming on, David.
Thank you.
Enjoy the rest of the festival.
I shall.